All right, you're looking at a weekly chart of ENPH, which was one of the great winners of the past decade. If you look at the monthly chart here, it went from like $1 to $300 and it was a big winner from what, 2012, 2013 to 2023. There you can see it traded from $1 up to, I don't know, 320. Anyway, that's not the point of the video. The point of the video is Cam asked a question about price to sales, and he was referring to Bill. When you want to compare stocks, you want to compare them to their own group. You don't compare a software financial stock to a footwear stock or to a semiconductor stock. You want to compare it to its peers. But I'm showing ENPH because this is a stock that it was richly valued. It was, overvalued, as people were always saying, like it's really an expensive stock, which was fine until it stopped growing sales at the expected rate. Now, obviously, the interest rates had a big effect on this stock. And when the interest rates were rising and the growth started slowing, this thing took a big haircut from that 300 area to $75. So, but now I think actually ENPH looks good, but that's not the point of the video. The point of the video is when a stock is growing and meeting and exceeding expected sales and earnings growth, it's going to get a favorable multiple and it's going to look really expensive. But when the sales and earnings slow down, and this has had to do with rates, it's sold off. So if I go to the daily chart, I'm going to put this thing on my ready list because I think that 132.16 looks pretty darn good to me. Right there. This is a stage 1 base, but that's not the point of the video either. That looks good. The point of the video is he wanted to look at Bill because it was one of my top IPO stocks, and I had said that Bill might have been a little expensive, I guess, and I just wanted to go to its peers. If I go right here, you can see that Intuit is the big kahuna in this computer software financial group with 175 billion market cap. Coinbase at 41 billion. So you want to look at stocks within its parameters here. And Jack Henry, GuideWire, Bill, Vertex, they're all in about the same class, I guess you could say. So if you want to take a look at Bill and see how its sales and earnings are projected, it has real strong sales growth. I mean, if you take a look at it right now, you can see that it's doing about, I don't know, a little over $1 billion, 1.2 billion in sales. It's an 8.7 billion, market cap. It's roughly about 8 times sales. So you got to look at its peers. You don't want to compare that to a footwear stock like a Skechers because you can see that Skechers is doing about, it's doing. They're doing what, about over 8 billion in sales with a 10 billion market cap. Yeah, they're about just a little over 1 time sales, and Bill at 8 times sales looks really expensive. So you want to compare it to some of the stocks in its group, and Jack Henry was one that was mentioned there. So I want to take a look at Jack Henry. This does not have the sales or earnings growth that Bill does. It's got more sales. This has got, roughly, it's doing more than 500 million a quarter. So they're doing, maybe 2.5 billion, and with a market cap of 11 billion. So they're roughly about, 4 times sales. So they're a little less expensive, but it has more growth. And as we get into this environment where the rates are allegedly coming down, your valuations and your are going to increase. Your high value stocks are going to have greater multiples. The multiples are going to expand during this time of the Fed lowering rates. Hopefully they lower rates. If they don't, we'll really have problems with the market. The other one was GuideWire software, and this one has roughly about a billion, a little less than that, and with a 9 billion market cap. So it's trading about 9 times, which is a little more expensive. But the thing is the growth. You got to look at the growth. And the growth is the big deal here with this. And GuideWire does not have the growth that Bill does. So Bill should be afforded a greater multiple. I hope that makes sense. Price to sales or even earnings, right? They're going to grow earnings at $1.14 this year. And I don't really look at PE. for growth stocks. I look more towards sales, price to sales. But you want to be in the ballpark if you're looking for a position in a stock. And so GuideWire, this one looks a little pricey, doesn't have the growth that Bill does. So let's take a look at another one that was in that group. And this one has a little better growth, but doesn't have the sales at all. It's got a little over $500 million in sales with a 4 billion market cap. So this is, about the same as Bill, 8 times sales, but Bill has, gosh darn it, Marty, Bill has the better growth. You can see the growth profile on this one. I know it's decelerating, but sometimes in these financial software, it's seasonal, tax season, they do a little better. So you got to watch that as well. But I would say, Bill, and I included this on my 42 IPO stocks from 2019. And I believe, if it continues this growth path, that the 8, I guess it's about 8 times sales is roughly in line with its peer group. Like I said, you can't compare it to, an NVIDIA or a semiconductor of footwear. You're comparing it with the other computer software financials, which are, one of the top groups here. It's ranked number 2. So these stocks are all, doing well and being fairly valued, I would imagine, there at 8 times sales. But if you wanted to start a position in Bill, you're talking fundamentals there with the price to sales. But technically, I mean, this looks pretty good to me too. Why? Because, well, it looks like it's made this got this big haircut. That must have been an earnings mess up or whatever. But since then, since the sell-off, this thing is traded through its moving averages through the 50. Yeah, it's below the 200, but now the 10 and the 21 have crossed above the 50. So this thing is trending higher. It's got some resistance ahead, but Bill, I mean, if you're looking at if you're looking for the grand slams, like I had posted in there, I think this is one that you definitely want to look at. And as the interest rates are coming down, multiples are going to expand. And I think Bill is definitely a possible candidate for, a big move here. And if I go to the monthly, you can see that it did have that big move, sold off with the rest of the stocks, and now has recovered, had an inside month in the month of December. So to me, Bill looks pretty good here. If you wanted to take a swing at this, I mean, probably not going to get much lower unless, like I said, the expected growth slows, so you got to pay attention to their earnings, which is on February 1st. So I hope that answers your question. And thanks for asking. Anyway, we never give up at mcstockcharts.com.